Good morning, Paul Georgie from Allendale. It's November 22nd, 2010. The grain markets today should open a little bit higher. We've got them called higher anyway here today. However, the outside markets have kind of changed pace from where they were earlier this morning. Dollar right now up about 28. Crude down 4 ticks only. Gold is about unchanged at this point. And stock markets stock indexes actually have turned lower on the day. Some of the highlights we've got here today, and we've got to watch for this week, is will the funds be around to sell this market? And because we've seen on the CFTC report on Friday where they did liquidate several thousand, tens of thousands of contracts of corn and soybeans and actually increase their short position in wheat in that past week. Now remember that ended, and that data ended on Tuesday. So it looks like they sold more into the end of the week, and we would expect that they could be doing the same thing, that rallies now will be met with some fund selling as that pattern has turned from increasing to decreasing positions. Some of the other things that are going on around the world is the weather situation in the southern Midwest and the southern plains. More moisture coming in there, and should see some more moisture as we move forward here the next 10 days to 2 weeks. Australia, still too much rain in the eastern portion, and the quality of wheat is starting to become a problem there. And Argentina is also still very dry. So those are definitely supportive factors overall, but again, the trade is being dominated by the fund activity. We've got option expiration this week on Friday, so we've got a large open interest yet in the corn strike at around the $5 area, both puts and calls. So don't be surprised if the December contract migrates toward that $5 as we go into the expiration time period on Friday. We do have a short week. Export sales will be announced on Friday instead of Thursday because of Thanksgiving. And the major factor we got going here this morning is the Chinese and how they're trying to get a hold of or tame that inflation that is going on in their country, and especially trying to curb the increase in food prices. And they have supposedly set out 16 different rules that they're changing to try to manage this very closely. We've seen the Dalian exchange close lower overnight, which also has turned our market from being up sharply to just marginally higher here at the 7:15 time frame. Another issue that is going to be dealt with this week, and we're going to have to monitor very closely, is this the bailout of Ireland. The EU supposedly, we're hearing rumors of around 90 billion euros that are going to be given to Ireland or loaned to Ireland. Seems to have stalled the rally in the dollar for now, and the weakness in the euro, but that agreement still, details need to be worked out, and not met with 100% approval here in the euro states. So that is going to be impacting us. We also have Spain and Portugal sitting in the limelight here, waiting to be helped out as well. So one at a time. And then we've got Greece that also is having some problems meeting their agreement with the euro and repaying some of the dollars, or the euro dollars, back that they borrowed. So not all warm and cozy over there, and that could have certainly an impact on our markets as we slow down here in the U.S. because of the Thanksgiving holiday. Another factor that a lot of trade is concerned about is the seasonality that many times the soybean market especially rallies into Thanksgiving, and we're going to have to watch that very closely. So a lot of different factors that will cause some volatility here this morning and throughout the week. In the cattle trade, got cattle on feed report on Friday. That was neutral to bearish. Placed a few more cattle than what the trade was expecting. But that's overall not that big of an issue. We still placed less cattle than we did a year ago, and that we have on feed a year ago, and we have cutout values improving on Friday. However, some of the influence of the outside market, the mindset of the feedlot managers that we got to clean up inventories going into the end of the month, that could give us a little pressure here in the livestock futures as we open here this morning. In the hog trade, we had cutout values improve, but the cash markets in the country are showing a little weakness here today. Technically, the hog market is in a sideways pattern here, and it's going to depend on which direction we break out of this market technically. However, the fund activity has been dominating the grain trade here. They could do the same thing in the hogs. If they come in and start selling, we could see some significant pressure there. So a lot of things to watch, reasons to stay in tune with Allendale Research. You can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.